Hello friends, welcome back to the channel. Today we are diving deep into one of the most powerful wealth building tools in the world, the stock market. This is a complete stage-by-stage guide designed to take you from a complete beginner who knows nothing about stocks all the way to someone who understands the markets like a pro. Now let's be real, the stock market has made millions of people rich, but it has also caused millions to lose money. Research shows that nearly 80% of short-term traders end up losing money in their first 2 years. But at the same time, long-term investors who stay consistent often grow their wealth massively over time. So the big question is, what separates the winners from the losers? That's exactly what we are going to uncover in this video. Before we go too far, let me tell you something exciting. I have created a free YouTube community on WhatsApp for all new and intending investors in the stock market. It's a safe space where you can ask questions, learn from others, and get my personal guidance on your investing journey. And guess what? It's completely free for now, but only for a limited time. So if you're serious about learning and you don't want to walk this journey alone, make sure you join right away. I will share how you can join before we wrap up. Now grab a notepad and settle down because what you're about to learn can literally change your financial future forever. Without wasting much time, let's get started. Here are things you will learn from this video. Stock market basics, why people fail in the stock market, laying the foundation, tools of the trade, investment strategies, the do's and don'ts of stock market investing, risk management, success habits of pro investors, myths and reality, and lastly, roadmap. So you can see there's a whole lot to learn from this video. So let's start with the first one, which is stock market basics. What exactly is the stock market? Think of the stock market as a big marketplace. Instead of buying food items or gadgets, you're buying pieces of a company. These pieces are called shares or stocks. If you own one share of a company, you literally own a small size of that business. When companies want to raise money, they sell shares to the public. Investors like you and me buy those shares, and in return, we become part owners. If the company grows and makes profit, the value of your shares can go up, and sometimes you even get dividends, which is a portion of the company's profit paid back to shareholders. But here's the kicker: if the company struggles or the company takes a hit, the value of your shares can drop. That's why stock market investing requires knowledge, patience, and strategy, and that's what this guide is all about. We will cover terms you need to know like ETFs, IPOs, dividends, blue chip stocks, market indices like the S&P 500 and more. Don't worry, I'll break them in plain simple language so anyone can understand. Let's walk through the next part, which is why people fail in the stock market. Now let's talk about the dark side for a moment. Why do so many people fail? According to a report from the Financial Times, most retail investors lose money in their first few years. Why? Because they jump in without a plan. They hear a tip from a friend, they chase hot stocks, or they panic sell when prices drop. Here is a fact: if you had invested $1,000 in Amazon in 1997 during its IPO and held on until today, your investment would be worth over $2 million. But guess what? Most people sold too early when the price dipped. This shows you that patience is as important as knowledge in the stock market. So one of the first things you need to understand as a beginner is this: the stock market is not a casino. It rewards discipline, strategy, and long-term thinking. If you treat it like gambling, you will lose, but if you treat it like building wealth, you will win. The next chapter is laying the foundation. Before you even buy your first stock, you need a foundation. The first thing is set financial goals, which is, why are you investing? Is it for retirement, buying a house, funding your kids' education, or just to grow your wealth? The second thing is risk tolerance. Some people can't sleep at night if their portfolio drops by 5%. Others don't mind waiting out the storms. Knowing your tolerance helps you pick the right investment. And the third foundation you need is decide your budget. Don't invest your rent. Don't invest money you will need next month. Only invest money you can live alone for at least 3 to 5 years. And remember this golden rule: start small, learn as you go, and increase gradually. The next part of this video that we need to look at is tools of the trade. So how do you eventually get started? You will need a brokerage account. Think of this like your bank account for stocks. There are lots of brokers and apps out there depending on your country. Robinhood, E-Trade, Fidelity, Vanguard, ChartSwap in the US, or Trove, Bamboo, and Chaka in Nigeria and Africa. Each come with different fees and features. When choosing a broker, pay attention to these four things. Be sure it is a licensed broker. Understand their commissions and fees. Lower fees is better. Ease of use: beginners should choose apps that are simple. And lastly, access to markets. Make sure you can buy both local and international stocks with the app or broker you choose. Once you've opened your account, you will fund it with money and you're ready to make your first investment. If this is something you need my guidance to do, use the WhatsApp link on the channel description and this video to join my community. It's free for a limited time only. Let's move quickly to the next part, which I consider one of the most vital skills you need in your investing journey, and that is investment strategies. Now let's dive into the meat of this video, not just strategies but strategies that work. The first strategy is long-term investing. Buy great companies and hold them for years. This is how Warren Buffett became a billionaire. The second strategy is growth investing. Buy companies with strong potential for future growth. Think tech companies, renewable energy, AI, etc. The third strategy is value investing. Look for undervalued companies that are trading below their real worth. The fourth is dividend investing. Buy companies that pay regular dividends for passive income. And the fifth strategy is ETFs and index funds. This strategy is perfect for beginners who don't want to pick individual stocks like the S&P 500, which has returned an average of about 10% per year over decades. Each of these strategies has its pros and cons. This is why you don't just need to pick hype stocks randomly from creators, because their strategies may be completely different from yours. Don't get me wrong, I'm not saying there are no experts out there to listen to, but I'm only saying you have to be sure their goal align with yours. From here, we go to the do's and don'ts of stock market investing. Let's keep it real. Here are some golden do's and don'ts you must remember. The do's are: do your own research before buying any stock. Do diversify your portfolio. Don't put all your money into one company. Do think long term and keep learning. The don'ts are: don't invest money you can't afford to lose. Don't panic when the market drops. It's normal. Don't follow random tips from friends or social media blindly. And lastly, don't time the market. Even pros get it wrong. It's not wise that you learn all these things about the stock market without learning how to protect your assets. For that reason, let's move to risk management. Now, pay attention. In all honesty, risk management is what keeps you alive in the game. Use stop loss orders to protect yourself. It's important to diversify across sectors like tech, healthcare, finance, and energy. Mind you, don't spread too thin, because having 100 stocks in your portfolio doesn't mean diversification but confusion. Rebalance your portfolio every few months. Remember, in the stock market, protecting your money is as important as growing it. We move next to the success habits of pro investors. This is where the magic happens. Pros like Warren Buffett, Peter Lynch, and Charlie Munger didn't become great by luck. They studied business deeply, they were patient, and they controlled their emotions. One of Buffett's quotes I love is: "The stock market is a device for transferring money from the impatient to the patient." So if you want to succeed, learn to be patient, stay consistent, and avoid emotional decisions. Let me quickly tell you the myth and reality. There are so many myths out there, but let me bust a few. The first myth is that you need a lot of money to start investing. The second one is that the stock market is gambling. And the third myth is you can get rich quick. On the other hand, the first reality is you can start with as little as $10 or 5,000 naira depending on your broker. The second one is gambling is based on chance, whereas investing is based on research and patience. And the third reality is you can get lucky short term, but real wealth is built over years. What next? Roadmap, beginner to pro. Here's your simple roadmap. Learn the basics, open your brokerage account, start small, that's to buy your first stock or ETF. Diversify slowly, learn risk management, stay consistent, and keep learning. And lastly, join communities like our free WhatsApp group to stay motivated, informed, and get guidance. Do this, and in a few years, you look back and thank yourself for starting today. The stock market is one of the best ways to build wealth if you approach it the right way. Don't rush, don't gamble, and don't copy blindly. Instead, focus on learning, applying proven strategies, and building good habits. And remember, you don't have to do this alone as a beginner. Like I said earlier, I've created that community on WhatsApp to guide you, support you, and answer your questions as you start your investing journey. It's free for now, but only for a limited time. Don't miss this chance to join. If you found this video helpful, don't forget to smash the like button, comment, and subscribe. Also, feel free to share with someone you think may need to see it. Drop your questions in the comment and let me know what part of investing you want me to cover in the next video. Until next time, invest wisely and stay consistent.